Welcome. Today we are talking with Dan Allen. He is the Senior Director of Banking and Payments Intelligence at JD Power. Dan, welcome and thank you for joining us at today's Banker Digest.
Hi, Larry. Thanks for having me today.
Great. All right, well, let's get started. So, Dan, how does JD Power collect customer experiences data in the banking space?
Well, we primarily use two methods. The first one is for our competitive benchmarking across the banking industry, and of course, we do other industries as well. The survey administration is all online, and we use vendors, a variety of vendors, to recruit customers to take our survey. The second approach is more what we call a deep dive, where we use the exact same survey that we do for competitive benchmarking, but clients provide their own sample. And so this is a way in which they can gain greater insights from more of their customers than from our syndicated research.
Great, great. Thank you. Thank you. That's very helpful. So, based on JD Power's analysis of customer experience in banking, what are some of the factors that customers find to be the most favorable, most attractive?
Well, of course, that does change a little bit over time depending upon what's happening. But certainly what we saw in 2023, there were four areas: trust, customer service, or we call it people, digital channels, and then convenience. Let me just take trust there for a moment. That's probably the most important factor. And customers want to know that they're in the right product and service, that the bank's not going to hit them with an unexpected fee, knowing that their data is secure, and that the bank has a good reputation. All of that is important for trust. As it comes to people or customer service, they're wanting, well, basically branches and contact centers. This is where they play a key role, being friendly, knowing their customer, and then also to being an advocate for the customer, right? Trying to help them out. Digital channels, this has really come a long way in the last few years, but banking customers expect an easy and engaging interactions, whether they're online or through a mobile app. And across the industry, that now has pretty good satisfaction. 5 years ago, different story, right? And finally, convenience, and that's another one that's been up and down. For a few years prior to COVID, many banks were closing branches, so convenience was not good. But digital tools were not good either. They were not up to par in many cases. So
Hmm.
customers really struggled with that aspect. But since COVID, right, more customers had to use digital channels, more banks upped their game. And so now that's a very high expectation. Banks do very well in the digital space and convenience now.
Thank you, Dan. Really great insights there. So, looking at customer experience from the other direction, what are some of the factors that banking customers respond to as being the most negative or off putting?
Well, there's primarily two that we're now seeing from our 2023 research. One is really helping customers save time or money, and the other one is fees. And I kind of touched on that earlier. Unexpected fees.
Okay.
They just, most customers will accept that if they're going to do something wrong, that they're going to get a fee, but
Hmm.
just don't surprise them with the fees, and communicate with them. The other one, is helping to save time or money. A lot of banks have not provided some of the products or financial advice to help customers grow their money, right? So they didn't have the savings products or the
Right.
investment products, and talking to customers on how to avoid fees. So those are two areas that are really troubling them.
Great. Thank you, Dan. As you well know, banks are very eager to attract younger customers. Has JD Powers identified any significant differences in quote older versus younger customers?
Right. Yes, we have. And of course, there can be many, and some of those could be based upon the way the bank inherently treats the younger versus the older customer, right? And some of that is about the life stage, when you look at that. And so some of the key differences we found, and I think some of these play well for the banks now that want to acquire younger customers,
Hmm.
is for instance in marketing. So the under 40s are about 30% more likely to say that they're okay with a bank collecting data on their lifestyle and interest so that they can better tailor their products and services.
Hmm.
So that's good news, right? They tend to be a little bit more open that way.
Okay.
Um, Selecting a bank, when they actually go to selecting, about 30% more of the under 40s actually do a lot more research about the bank before selecting a bank. And so that's why it's very important to have a good digital presence, right? And have a good digital, website. We call it the unauthenticated website.
Right.
And one of the things though that we do find interesting, though, despite that research, the top three reasons for selecting a bank do not vary between age group. So it's recommendation from a friend or family member,
Okay.
that's top.
Yep.
And then it is the bank's reputation or the convenience of branch locations. And that last one, the convenience of branch location, feeds into another area that we see a difference, which is channel usage.
Hmm.
Now, as you would expect, about 20% more of underage 40s use online and mobile app more than others.
Right.
Um, but what we find, this common myth that younger people don't want to go into a branch, our research says that's not true. They basically, about 87% of those under 40 expect their branch usage to be the same or grow. So
Hmm.
they visit a branch a little bit less than the over 40s, but they want to go in and they're not going in just to cash a check or something like that, right? Because they're using mobile deposits for that. What they're going in for is advice on loans, credit cards, mortgages, those types of things. What type of investment accounts to open. So
Right.
that's a key difference, and that sets up a lot of these banks very well.
Great. Great. Thank you very much, Dan. Appreciate you spending time today with today's Banker Digest and sharing JD Power's fantastic insights on the experiences and services important to bank customers, both young and old. So again, thank you, Dan.
Thank you, Larry. A pleasure to be here. Have a great day.
Thank you. In closing, thank you for joining today's Banker Digest. If you have additional questions for Dan, please see the link in his bio.